Welcome back to Investing Talk Podcast.
Great to be back.
Today, we're looking into a company that's, well, it's got a really interesting, almost contradictory story happening right now. Indonesia Energy.
That's right. And the big question when we're trying to answer today is Indonesia Energy a good buy right now? Because you've got this microcap producer. Technically, it looks like it's at an inflection point. Huge momentum.
Yeah, the charts look fantastic.
But you really have to dig deeper than the charts. There are some serious financial headwinds here.
We've sifted through their latest operational updates, some analyst notes, SEC filings. We're going to try and unpack why this stock shows such, compelling technical strength, but also carries significant fundamental risk.
It's definitely a conviction play, whichever side you land on. We want to give you the context for both.
Yeah, okay. And before we jump in, just a quick reminder to you listening. Please hit that subscribe button, give us a like if you find this helpful, and definitely leave a comment.
Yeah, and if there's a specific company you want us to analyze like this, just pop it in the comment section. We do look at those.
All right, setting the stage. Indonesia Energy is juggling two big things. They're moving from seismic work back to actual drilling in Indonesia, their core area.
Finally getting the drills turning again.
Exactly. But at the same time, they're attempting this pretty major international pivot into hybrid energy in Brazil, of all places.
It's a lot for a small company, like walking a tightrope. Let's start with the good news, though, the core stuff. Their main asset, the Cru block in South Sumatra.
That's where the current production comes from, right? Their bread and butter.
Such as it is, yes. And the news from Cru recently, back in October 2025, was actually quite positive. They reported a 60% increase in proved gross reserves.
60.
Wow, 60%. That's substantial. So what's the total now?
Puts them at about 3.3 million barrels of proved reserves. And look, this isn't just pulling numbers out of thin air. It's backed by that advanced 3D seismic work they finished in 2024.
So the seismic data actually supported this upgrade. It did. It told them where to focus. Plus, maybe even more importantly, they got an improved contract extension. Better terms. That boosts their profit split on those barrels.
Okay, so more oil and a better cut of the profits.
Yeah.
That sounds like a solid foundation.
It should be. Which leads to the operational shift happening now. Seismic's done. Time to drill. They're gearing up to restart drilling late 2025. Plan is for at least one new well pretty quickly.
And that's part of a bigger plan, right?
Yeah.
Something like 18 wells.
Yeah, a multi-year program targeting 18 wells at Cru. This is the key moment, turning those exploration findings and reserves into actual cash flow.
Makes sense. Focus on the proven asset, generate cash. But then there's this Brazil thing. It feels like a sharp turn.
It does, and you have to ask why now? Just as things are looking up at Cru, my read is management might be looking long-term, at the energy transition.
Hedging their bets. Hedging bets with a hybrid solar and natural gas project. That's quite a hedge.
It is. In August 2025, they signed this non-binding memorandum of understanding, an MOU, with a Brazilian company, Aguila Energia e Participações, AEP.
And the plan is off-grid power.
Yeah, hybrid solar plus gas projects. Northeast Brazil, starting small, maybe 10 megawatt pilot projects, but potential to scale up massively, like 400 megawatts.
Targeting data centers, I saw. Those need huge amounts of power.
Exactly. Autonomous power for data centers. It's a completely different world from their Indonesian oil wells. It's definitely aimed at, ESG investors and future-proofing the business model.
Okay, but let's stress that key detail again. The partnership was formalized, yes, October 24th, 2025. But the reports are clear. No firm financing. No binding commitments yet.
Absolutely crucial point. It's exploratory. It signals ambition, which can attract certain investors, but doesn't actually bring in cash right now. It's an idea, not a funded project yet.
Which leads us right into that core conflict. The financial reality versus this technical momentum everyone sees on the chart. Let's get the hard truth first. What's the financial picture really look like? Okay,
the cold water. This is a micro-cap energy producer. And when we say micro-cap, we mean it. Market cap around, what, $45 million? $45.71 million to be precise.
Tiny. So volatile, not much trading volume.
Exactly. High volatility, low liquidity. Forget institutional ownership for the most part. And that small size reflects their actual operations.
Right, the revenue.
It's minimal. They're still basically in the development stage. Trailing 12-month revenue is only $2.29 million. Oh. Think about that.
$2.3 million. Yeah, that's really small for a public energy company with global ambition.
It's tiny, and it means they're losing money. The TTM net loss was over $7 million. $7.07 million loss. negative EPS of $0.51.
Wow. Okay, so burning through about $7 million a year with only $2.3 million coming in.
Yeah.
That's not sustainable long-term without outside help.
Not at all. That's the critical point. They have a very limited financial runway based on current operations, significant sustainability risks.
So how do they pay for drilling 18 wells in Indonesia and exploring massive hybrid projects in Brazil?
Good question. They need cash. That means either finding a major partner, perhaps for Brazil, or, and this is much more likely in the near term, equity financing, selling more stock. Dilution. For you, the investor, that means your slice of the pie gets smaller. That's the big fundamental risk hanging over everything. They need money.
So they're burning cash, hoping for a big win.
Yeah.
And that big win potential is tied to that other block, right? Satorum.
That's the lottery ticket, the Satorum block in West Java. It's huge, almost 4,000 square kilometers. Massive exploration potential, but also very high risk and very expensive to prove out.
So they need cash from crude to survive long enough to potentially hit it big at Satorum.
That's the tightrope walk, precisely.
Okay. Now let's switch gears to why people are excited. The technical picture. Because that tells a completely different story.
Completely different. It's all flashing green, basically.
Right now, trading around $3 and $3 and $3. But look at the 52-week range. $2.10 up to almost $8. $7.95. That shows you the potential for explosive moves.
That kind of volatility cuts both ways, obviously. But yeah, it attracts traders looking for momentum.
And the momentum indicators are strong. Technical analysis summaries are showing strong buy. You've got like 11 distinct buy signals. And crucially, the stocks above all the key moving averages.
The 10-day, 20, 50, 100, 200-day?
All of them. That alignment usually signals strong buying pressure and upward momentum, at least in the intermediate term.
And you can't ignore the oil price connection. This stock is sensitive to crude prices, highly correlated.
So it's a leveraged bet on oil.
Pretty much. If WTI crude stays strong, say above $80 a barrel, that provides a strong tailwind. It makes their current production and future drilling look much more profitable.
And here's a really interesting technical detail. The beta. It's negative 0.65.
Yeah, that's unusual for an energy stock. Negative beta means it tends to move counter to the broader market.
So if the S&P 500 is down, the stock might actually go up, assuming oil prices are holding steady or rising.
Potentially, yes. It could act as a sort of hedge against general market downturns. Adds a diversification element, which is quite unique.
Okay, so we have this huge disconnect. Charts screaming buy, financials screaming caution. What could happen in the next few months to sort of push this one way or the other?
The next 3 months are pretty packed with potential catalysts. First up, November 2025. They're supposed to resume drilling at Crew Block. That's the first real operational news we'll get post-seismic.
Boots on the ground, or rather drill bits in the ground.
Exactly. Then December, we get the Q3 earnings release. That's the financial reality check. How bad is the cash burn? Any updates on funding plans?
Especially for Brazil.
Right. And then the big one is likely January 21st, 2026. They have an investor update conference call scheduled. That's where management really needs to deliver.
What are people expecting from that call?
Guidance on reserve growth confirmation, on profitability from those better contract terms, and crucially, a real update on Brazil. Is there financing? Is it moving forward? Any concrete steps?
And just structurally, January often sees ETF rebalancing, right? That could add some volatility or liquidity changes too.
Good point. It could amplify moves around that time. We also need to talk about the speculative nature of this stock.
The retail interest. Meme stock behavior.
Yeah, exactly. There's elevated retail interest. Its price action can sometimes disconnect completely from fundamentals and just run on sentiment, on buzz.
So what are the key rumors or speculative points to watch?
Number one is definitely financing for Brazil. If they announce any kind of funding deal, state-backed, private partner, whatever, for those pilot projects.
That would be huge. It would validate the whole pivot.
Instantly. The stock would likely surge, regardless of the current P&L. Then there's talk, maybe wishful thinking, of another upward revision of reserves in Indonesia, maybe linked to initial drilling results.
Possible, if the first wells look really good.
And the third one is M&A chatter. Could a larger regional player look at those improved crew assets now? An acquisition offer would obviously be a big win for current shareholders.
Okay. And long-term, the dream is still Satorum, right? If that exploration hits.
That changes everything. If Satorum delivers big in 2026 or beyond, this isn't a microcap anymore. It's a potentially significant producer. That's the multi-year lottery ticket.
And some analysts are pricing that dream in already, aren't they? those long-term targets.
They are. You see projections like $5.60 by 2030, even $16 by 2040. But let's be absolutely clear. Those forecasts bake in massive success, near perfect execution at Crew, and a major discovery at Satorum. Huge assumptions.
Which brings us right back to the risks. We know the financials are weak. What's the biggest danger for someone looking at those nice charts and those optimistic targets?
The biggest danger is that the cash runs out before the dream materializes. Financial sustainability is risk number one. They are burning cash. Number two, the valuation right now is purely speculative. It's not based on current earnings or cash flow.
So if that retail excitement cools off or the January call disappoints,
The floor could drop out very quickly. Especially with low liquidity, it can be hard to sell if everyone heads for the exit at once.
right, what else?
Obviously, dependence on oil prices. If crude falls back below, say, $75, the economics look much worse. The sources also mentioned some concerns about inconsistent investor communication, transparency issues. That can keep bigger money away. And of course, Satorum is still high-risk exploration. It might come up dry.
Okay, so pulling it all together, final verdict. What's the strategy here?
Look, the bottom line is this is high risk, high reward, no question. We'd put an overall rating, maybe 6.5 out of 10, leaning bullish but with major caveats. This is only suitable for aggressive investors.
People comfortable with volatility and who understand the oil market exposure.
Exactly. You need tolerance for risk. For short-term traders playing the momentum, maybe looking towards that January catalyst period.
What's the play?
You could target breakouts, perhaps aiming for the $3.50 to $5 range through January. But, and this is critical, position sizing.
Don't bet the farm.
Absolutely not. Given the microcap status and the negative income, keep exposure small. Maybe 2% to 5% of your portfolio, max. You have to balance those tempting technicals against the very real financial fragility.
So let's leave you with a final thought to chew on. That Brazil move, it's exploratory, non-binding for now. But it clearly signals that management sees the writing on the wall regarding the long-term future of fossil fuels.
Right, and the big question over the next year or so is, can they turn those Indonesian reserves into cash flow fast enough to actually fund that pivot to Brazil? Or will the cost and risk of the Brazil venture end up sinking the progress they're making back home?
It's a fascinating balancing act. As always, remember, this is just our analysis. All investment requires your own thorough due diligence. Definitely review the company's latest SEC filings for the full picture.
Good advice. Understand the risks fully.
Thanks for tuning in to Investing Talk Podcast.